Sole trader or limited company, which one is right for you? If you're about to set up a business, the first big decision you're going to have to make is, do I set up as a sole trader or do I set up as a limited company? In this video, we're going to break down the pros and cons of both. So the first point to consider is the legal separation, the legal point. So a sole trader is not legally separate from their business. And what this means is that, if there's a problem in the business, basically the debts of the business or any liabilities in that business are the debts of the owner, so the individual. That differs to a limited company. When you set up a limited company, you effectively create a new legal entity which is separate to the owners. So you do get that nice distinction between the company and the individual, and therefore your personal assets are protected with a limited company. But with a sole trader, they're potentially not protected. So that's the first consideration. The second consideration, and this is relevant to some and not relevant to others, but it's about kudos. And some will say that having a limited company is more prestigious than a sole trader business, and that's because it's got, it's set up in its own legal right. And if you are dealing with perhaps bigger companies and you're doing what we call business-to-business transactions, then they might expect your customers might expect you to be a limited company because it has frankly a bit more prestige. It's been set up formally, it's recognised at Companies House, and therefore that might be a requirement if you are dealing with bigger companies. The third area is administration running costs. Typically, it's really simple to set up a sole trader. You go onto the HMRC site and you register your business. And you must register within 3 months of setting up your trade, but the process to set it up is very straightforward. With a limited company, it's a bit more complicated. With a limited company, you've got to register it at Companies House. And as part of that registration process, you've got to identify who the directors are going to be, who the shareholders are going to be, the company name, the SIC code, which means basically it's trading classification code. So all of those considerations need to be taken into account when you set up a limited company, and that obviously comes with administration and time. So the process to set up a limited company is more complex than setting up a sole trader. The other thing to think about is costs of running. With a sole trader, it's relatively straightforward to run a sole trader business. You are required to do a tax return each year. In that tax return, you'll declare your sole trader profits, and you will pay tax on those profits. But that process is relatively straightforward. With a limited company, it is more complex. So the filing requirements for a limited company, as a minimum, you'll be required to file a set of company accounts. You'll be required to file a corporation tax return and a confirmation statement. As a minimum, there may well be additional things on top of that, but those are three that are going to be key. There is a cost to producing those reports and filing those reports. Typically, you'll pay an accountant for that. So again, that cost needs to be factored in at the outset. So it's worth getting some quotes to understand what that cost of running a limited company would look like versus running a sole trader business. The fourth area and last area is around drawing and taxes. So with a sole trader business, you will effectively be taxed on the profits in the tax year that they arise. And what that means is, tax year runs from 6th of April to 5th of April every year. If your profits land in that period, then you will pay the taxes on those profits in that period. With a limited company, you do have more flexibility. If you go out and you make profit in your business, you will pay corporation tax on those profits, but you don't have to draw those profits down to yourself personally. You effectively leave them in the business, and therefore you're not going to pay personal tax on those drawings. But as a sole trader, you're going to pay personal tax as soon as those profits are made. So you lose some of the flexibility to potentially manage that tax position when you've got a sole trader business, but you do have more control with a limited company on when you draw down those funds. In terms of taxes, tax is a very complicated area. When you're considering the tax implications of a sole trader versus limited company, there's been an awful lot of changes recently to the corporation tax rate, to the national insurance, employers' national insurance rate has changed, and all of those things factor into the tax calculations, and have frankly made those calculations more complicated now. And it very much comes down to personal circumstances. How much money you're going to put through that business, how much money you want to draw out of that business. and therefore every situation is unique. So you do need to do the sums and do the calculations. And a lot of the time an accountant will do that for you and then therefore present to you which is the best option based purely on taxes. But at this stage, just note that there are key differences between the tax treatment between a sole trader and limited company. So those are the key things that you need to consider when making that decision. If any of those points have been useful, then please do get in touch with us.